All right, so in this video, I'm going to talk about how to establish credit. So to get started with establishing credit, if you don't have any credit currently and no one has extended credit, one of the easiest ways to start is with a secured credit card, or perhaps with a cosigner on a loan, or maybe a single purpose card. Um, Sometimes a car loan with a large down payment will work. So for a secured credit card, the basic idea is you put a certain amount of money essentially on deposit, and that secures the balance. So if you don't actually make your payments, there is money that is essentially that's you've basically prepaid to ensure that your obligations are met. So the standards for getting a secured credit card are generally lower. And so then once you have put forward that money, you've gotten the secured credit card, and then you have established a nice history of making payments, you start building some credit. Once you've built some credit, then it's easier to perhaps obtain other credit cards or other consumer loans and things like that. For a cosigner is somebody who's also going to sign on the dotted line for a loan and also bears financial responsibility for the loan. And so if you don't pay, then the cosigner is obligated to pay. And so that means you need to find somebody who is willing to take that financial risk of being the cosigner. But that means because their credit is also associated with issuing the loan, that you can perhaps obtain a loan that you would not be able to obtain otherwise. Sometimes single purpose cards, such as gas station cards or things like that, sometimes the standards associated with issuing those are a little different. It might be easier to obtain those than some of the other more normal credit cards, things like that. Now, a car loan with a large down payment, for a car loan, the car is the collateral. So the size of the down payment is key here. If you made a very large down payment on the purchase of the vehicle on a percentage basis, and so you're borrowing relatively less, in that case, the collateral could be quite significant relative to the value of the loan. And as a result of that, that poses less of a risk to the lender. And so you may be able to do that when you couldn't get other forms of credit possibly. And then once you have established a history of making payments, then um, your credit starts looking better, and you might be able to qualify for other types of loans. Now, do be careful if you're trying to establish credit of the fee structure associated with cards and what kind of credit agreements you might have for different loans. So read the fine print. For a credit card, find out whether it's got any annual fees or any other kinds of fees, additional charges for cash advances, or anything like that. Which, as a general principle, as a little side note, I would strongly recommend against doing cash advances. They tend to start charging you interest immediately. And basically, from that standpoint, it tends to be just sort of a stopgap for poor budgeting. But anyway, so make sure you're aware of what the arrangements are. So in some cases, certain types of consumer loans, or say furniture or something like that, and they say no money for the first year, um, but or something similar. But the catch might be that you have to pay it in full at the end of the year. Well, if you can't afford to buy the furniture today with cash, a lot of people are not able to actually pay in full 12 months later. And so what happens is sometimes they even have things, or historically, there have been things like retroactive interest, where if you don't pay it in full at the end of that 12-month period, then you wind up paying interest for the prior 12 months, or you hit with other fees, or the loan that you wind up with the interest rate is very high. All kinds of potentially nasty features there. So ultimately, make sure you're very careful about what the fee structure is and the nature of the credit agreements and so forth. And in general, just avoid any kind of credit arrangement that's got, at least for credit cards, any kind of annual fees, any kind of penalty interest, things like that. Any kind of prepayment penalty for a regular consumer loan, that would be bad. You wouldn't want to have that, to avoid that. So, be mindful of those kinds of things. Interestingly, when establishing credit, the auto credit scores, so there are actually separate credit scores that auto retailers will often review, and those are actually often different from standard FICO scores, and partially to reflect the fact that the rate of delinquency on auto loans tends to be a bit less than the rate of delinquency on other types of consumer debt in many cases. And the reason for that is basically people are very reluctant to lose their car, because that means they can't get to work and so forth. So there can be some different auto credit scores that are tailored specifically for the auto industry. So that can be different from the standard FICO score. And sometimes individuals with poor credit, because that car is the collateral for the loan, sometimes what will occur is the lender will require a GPS device on the vehicle. And the reason for that is basically that car is the collateral for the loan. And so if the person has exceptionally poor credit, the lender may require that a GPS device be put on the vehicle so that they can find the car at any particular point in time, should it need to be repossessed due to lack of payment, so forth. So ultimately, if you want to establish credit, which you kind of need to start working towards it, is trying to build a good credit score. And so, it does start to feel a little bit like a chicken and the egg kind of a problem. Which one comes first, the good credit or the good credit score? And the reality is you kind of have to start somewhere, and that's where kind of starting with whether it's a secured credit card or a single purpose card or something like that, something to get some credit started and established. And then you can build that history of good on-time payment. Make sure you're not overutilizing. You start to build more of a good history there, and then that means you start getting a more robust credit report that looks good, which makes it easier to acquire other consumer debt should you wish to do so, and ultimately your credit score starts improving. And then if you did borrow more money, you'd be borrowing it at lower rates typically, and so forth. So you kind of have to get it started, but once you get started, it's a little bit of a cycle with that. And ultimately, try to avoid doing things that would damage your credit score. So generally, if you have less than 1% utilization of the credit that's available to you, that's kind of viewed as negative because you have a lot of credit available, but you're not using any of it. So it kind of looks like you aren't really showing that you know how to utilize and balance those obligations. But if you're over about 30% utilization, where you're using more than 30% of the credit that's available to you, well, that doesn't look good either because it looks like you're borrowing probably too much. If you start closing accounts, then that can damage the history and track record and the available credit. So that's not good. Opening a whole bunch of accounts all at once doesn't look good because it looks like you're trying to borrow a whole bunch of money, and so that tends to signify bad choices. So that doesn't look good either. So from that standpoint, you kind of have to try to build good credit, but then avoid doing the kinds of things that would be damaging to your credit, and to your credit score. And it is important to note that various entities, not just lenders, could look at credit scores. So things like employers, life insurance companies, landlords, cell phone companies, they may use various forms of whether it's credit scores, credit report information, what have you, to assess kind of the financial state or reliability of an individual. So it's important to establish good credit, even if you don't intend to use a lot of it. It's important to establish good quality credit. Hopefully this video has been helpful. Thank you so much for watching and have a great day.